The Great Recession from 2007 to 2009.
Yeah, this one I always like because, and I love the icon we used here is because we have a house instead of an arrow going up and down. If you're noticing, this is how much intent and purpose we put in this stuff, and it's because we did have a complete collapse. And you guys, you now have the context. You know the after effect. But for everybody who didn't know, back then, everybody's saying God's not creating more land.
That's right.
So houses can't go down in value. Man, oh man, did we show that is not the case. That once again, trees don't grow to heaven. Is that look at what happened back in 2008.
Yeah, we actually saw a number of key factors leading to this Great Recession. One of them, subprime mortgages. Banks were lending money to people that did not need to be borrowing money, and they were borrowing it in droves. We saw excessive leverage. Folks that didn't need to be borrowing money anyways were borrowing more and more and more. And then financial institutions were recognizing, hey, we can package up all this borrowing, all this leverage, all these bad deals, and if we package enough of them together, we can sell them as something that they are not. And this beautiful storm of horrible decision-making conglomerated together to create the largest downturn, the most significant drop that we've seen in the financial markets and the economy since the Great Depression.
Well, I mean, there's so much. Once again, just the hubris of the human condition is that we have this overconfidence. We take something that's good, and then the greed of the situation is, I mean, I lived through this, and I remember I even used one of these loans, a stated income loan. Can you imagine if your underwriting process, where housing is such a hard thing, just asking somebody, hey, on your word, what do you think you have coming? Stated income, no go out there and looking at pay stubs or anything else. This thing that shows just the amount of speculation and greed that went into this. And once again, valuations got disconnected from where the value of actual assets were. And if you want to see what the drop is, look at this. We lost 49% over this two-year period. And what this doesn't show, I mean, the graph shows it, but you can see a lot of this came in that fourth quarter of 2008 where the poop really hit the fan, where we realized this is where you saw Bear Stearns, Lehman Brothers, and all this other stuff, where you realize all these people who were just heavy into these mortgage products got crushed.
Yeah, from October 1st of 2008 to November 21st, that 49% loss that we saw of the Great Recession, 36% of that happened in that small time frame. That's how severe that fourth quarter was. And so the aftermath was pretty severe as well. Not only did we see a severe global recession, not just here in the United States, but we saw it across the entire globe. We saw bank failures. We saw government bailouts. It was unprecedented times. Again, the most severe economic downturn that we've seen since the Great Depression. And again, fueled by greed and bad financial decision making.
Well, I mean, we all remember the loss of jobs. Housing was just, you saw neighborhoods that just, had essentially PVC pipes on the land for a decade. Because it's just that this devastated. I even have seen people talk about the aftermath of this is the loss of trade because we just quit building homes.
That's right.
That's why now we have inventory issues where there's just, I think this has contributed to the situation we're in now where housing is hard, is because it had such a financial impact that just the supply just got disrupted, and we're still paying the price for some of these decisions.
And so what's the key takeaway? What things should you take away from this? Don't ever stretch yourself too thin, or don't get too lean on cash. Don't buy into the hype. Oh, well, they're not making more land. You can't lose money on real estate, so you need to buy as much as you can. You need to lever up as much as you can. You need to put as little down and borrow as much as possible. If you find yourself in a situation where people are trying to convince you to make financial decisions that don't even pass the common sense test, your spidey sense should start going off that maybe this is not what I need to start doing.
Well, I mean, also, I think about the financial order of operations. There's a reason cash has two steps. Is because we all take it for granted until we go underwater and get in an emergency situation. You're like, oh my gosh, cash is so much more valuable because home equity lines, all these other things that are tied to housing, it might be a little bit more quicksand than it actually is a stable or bedrock that we were presented. And that's why we've tried to help you. We not only have we given you the blow by blow of how not to fall into access to cash traps, but we have home buying calculators. We have a home buying checklist. Go to moneyguy.com/resources. Take advantage of these things because we're trying to educate you so you don't make those mistakes that history has already shown us the way for.